Hello dear students. So you followed the whole piecemeal distribution problem in the last video, which is solved by 5 different options, right? Then let us dive straight into common mistakes we should avoid while doing the piecemeal distribution problems. Take notes, write down so that you can preserve this and read it one day before the exam. 5 minutes you can revise the piecemeal distribution. Hello dear students, my name is Dipti Chheda. I am a qualified chartered accountant in the year 2000. Last 20 years I am in teaching field, helping you all students in the concepts of accounts and income tax, costing. These are my areas. Right. So the first common mistake in the piecemeal distribution, note it down please. When you start solving the problem, don't miss out taking the opening balance. Yes? If you start distributing the money to the partners, whatever is realized you start paying, and if you miss out taking the opening balance, the whole 2-page problem goes wrong. You will do all the calculations and then imagine what marks we can give you. Because if the opening balance is wrong, your collections, your payments, your balance for every month goes wrong. So the first common mistake is take opening balance from the balance sheet, add realization and start distribution. Second thing is, when you start making payment, the priority, we pay secured loans, we pay creditors, then pay partners loan separately. Make a separate column for partners loan. Don't merge it with partners capital account. Partners loan is paid in priority. So particulars, creditors, partners loan and then partners capital. If you add it in the capital, it may go wrong in the relative surplus table. Third very important common mistake is students are not able to tap up this point. If partners have given loan, you have paid it separately in the second mistake. In the third common concept is, if partners have taken advance, they have given loan, we will pay them first. But if they have taken advance and in the balance sheet, opening balance sheet, asset side advance is given. Now how do you adjust it? So reduce that advances from the capital and add reserves and all which are undistributed, and the final adjusted capital only you should take in the piecemeal distribution table. Is this clear? Are you all noting down? 3 common mistakes I have told. If you note down in your own way, take good booster notes. What I am saying is not a cut copy paste. It has come with lot of experience and doubt clearing with students and with lot of experience of the mock test paper correction. So take note, okay? Once again, the first point was write the opening cash, pay off partners loan first, and the third point is advances. If partners have taken advance, reduce it and then pay them. Fourth important point is, so many times below the balance sheet they give that some money is to be kept aside for paying some contingent liability or some provisions, right? Then keep it apart in the first realization only in the month of April. And April, May, June, July, August you come to know that you have kept apart for repairs or for contingent liability, say 2000, and actually you are paying only 1800 in August. Then remaining 200 you have to add in August realization. Otherwise it will go wrong, right? So take care of this point. Next point is commission. If commission is paid to one of the partners who is taking care of realization of the assets, or commission is paid on the amount which is paid to the creditors or partners, that commission has got nothing to do with his closing capitals. So you can pay that commission in cash to him. For example, if assets realized are 80,000, 800 commission you give to a partner and only 79,200 you distribute in routine. That 800 commission is paid in cash to partners, that will not affect his closing balance. And when commission is paid on payments, you have to apply the formula. into rate of the commission by 100 plus rate. Because out of the amount available, you have to pay commission and then you will distribute the money. So on distributed money, if it is 2%, then before the distribution amount available is 102. So these are the common areas which are usually asked in the exam. Rest whole problem goes very easy. And one important point, when you are doing piecemeal distribution, in your working note you make relative surplus table, correct? To pay off the excess capital to partners, so that a time comes when your partners' capital and their PS are in the same ratio, right? So when you are paying excess capital in a decided ratio, okay, first 35,000 to C, then 70,000 to B and C. In between somewhere, if C is taking furniture, he has disturbed the payment priorities. In that case, wherever any asset is taken by the partner, stop the payment over there, balance the table, again prepare the relative surplus table. Check your study materials, your practice manuals. There are so many problems wherein 2 times they have prepared the relative surplus table. Why they are doing it again? We prepared, we were going on making a payment. Somewhere a partner took furniture. Then they disturbed the balances, again prepared the priority table and again paid. And last but most important tip I want to give you now is, in these common mistakes you should avoid is, I hope you are taking all the best notes for this, and if you are liking these videos where I am giving lot of in-depth clarities on the concepts of accounts, tax and all, hit the like button, comment below the video, whatever doubts you have or whatever you like in the video. Do subscribe to my channel for more upcoming and other updates and knowledge, right? Okay, so here we dive straight into the last and most important point, which is not discussed in the textbooks, and it is, once you complete piecemeal distribution, April, May, June, July, the money is over. Still there is some unpaid balance in the partner's capital account, and actually it is loss. Whatever capital I am not able to pay, it's loss on realization. Then how do I check if my problem is correct? Because there is no balance sheet in the piecemeal distribution. So the secret is, after your problem, after your table, in a very brief, in a rough way, can you quickly prepare realization account? Take all assets at book value, take all liabilities at book value, total assets realized, total liabilities paid on the debit, realization. You know how you prepare a working note, rough realization account to get the total loss 30,000, and in your piecemeal distribution also the loss, if you total for all the partners, it will be 30,000. Try this last tip, and if you like it, let me know in the comment box. If you feel this video is helpful, do share it with your friends also. Thank you so much for watching it till end. Stay focused. All the best.